because concerning the new company, I'll have a brand new 401k with them.
Yes.
And if I do the minimum to match there, and then whatever's left that I normally would give per a paycheck, put that into the IRA with Fidelity. With that, because I'm thinking that I'd rather give more money to the bigger amount than a new 401k.
Yeah.
Does that make sense?
Well, yeah, it makes sense. I probably wouldn't do either. If they match 3%, you're putting 3% in, then, and you can put in 10%. I would definitely take the other 7%. How old are you, Steve?
I'm about to be 46.
Yeah, so I would rather you use that opportunity to put that additional money into an investment account that's outside of an IRA. I don't want you to make the mistake that our generation has made and accumulate all your wealth inside an account that the government's ultimately going to control. And you need to start accumulating some wealth outside of qualified money, outside of IRA accounts. So you've got this old IRA. You can contribute a little bit to that if you want, just to continue to dollar cost average. And you've got the new IRA, the 401k that you're doing. I wouldn't want to put more money than you're already doing in qualified money. You need to start, as I said, growing some outside of qualified money wealth. And I think that would be a very wise decision to do that. I would say that to everybody and just use this for a little bit of a coachable moment. We can't do that. Just don't do that. If you're on the younger side like Steven, don't make the same mistake that our generation did. So the baby boomer generation, we have all our wealth. I've talked to people that have $1 million in an IRA. Well, what do you have in savings? A couple $1,000. All their money is controlled by the government. All of it. They can change the rules. They can change the regulations. They can make it higher in taxes. They can make what wasn't taxable. They can do whatever they want. And we're going to be at their mercy. You're going to be at their mercy. Why? Because they now control your money. You're going to be at mercy at them. You've got to have money that is outside of that in an investment account. You've got to start saving, and building wealth outside of qualified money. Anything that's a Roth IRA, a traditional IRA, a 401k, a SEP, a 403b, a simple, whatever type of retirement account it is, it's qualified money, meaning that it qualifies for certain IRS rules and regulations. It qualifies for those things. If it qualifies for those things, the IRS believes the government believes if they control it, if they regulate it, then they own it. They can do whatever they want with it. And so we are not in an environment that we can take that lightly. We are in an environment where we've got to take that very seriously and with a great deal of concern. So I'm not saying don't do the 401ks at all or the IRAs. All I'm saying is at least, at the minimum, you need to split it up and contribute and grow some wealth in non-qualified money.
Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.